Inflation is affecting every aspect of Australian finances at the moment, from the cost of lettuce to home loan interest rates. So how high is inflation likely to go, and when will it reach its peak? We checked what some of Australia's leading financial institutions had to say in their forecasts. The Australian Bureau of Statistics, ABS. The ABS releases the Consumer Price Index, CPI, 4 times a year, covering the March, June, September, and December quarters. This measures household inflation based on changes to the price of a basket of goods, among other factors. According to the ABS, annual CPI inflation increased to 6.1% in the June quarter, with new dwellings and automotive fuel the most significant contributors. Trimmed mean annual inflation, which excludes large price rises and falls, increased to 4.9%, the highest since the series commenced in 2003. The next round of inflation figures from the ABS will be released October 2022. Australian statistician, David Gruen, said in a June 2022 speech that the ABS is developing a partial monthly indicator of CPI inflation which is particularly relevant given the current inflationary environment. The Reserve Bank of Australia, RBA. In his statement regarding the September 2022 cash rate hike, RBA Governor Philip Lowe said that the bank's central forecast is for CPI inflation to be around 7.75% over 2022, a little above 4% over 2023 and around 3% over 2024. To keep inflation from rising higher than this, and to bring it back to the RBA's target band of between 2 and 3%, the RBA board is committed to doing what is necessary to ensure that inflation in Australia returns to target over time. This could include additional interest rate hikes of 25 to 50 basis points later in 2022, though Governor Lowe previously said he does not expect the board will need to follow the United States in lifting the cash rate by 75 basis points. The federal government. In a July 2022 statement on the economy, Federal Treasurer Jim Chalmers said that inflation had already reached 6.1% in June 2022, and was forecast to peak at 7.75% in the December quarter 2022. However, he also said that inflation should moderate to around 5.5% in the middle of next year, before falling to 3.5% by the end of 2023. By the middle of 2024, inflation is forecast to normalize to 2.75%, which is inside the RBA's 2 to 3% target range. Inflation will unwind again, but not in an instant. Just as the domestic forces contributing to some of the supply-side pressures have been building for the best part of a decade, it will take some time for them to dissipate, but they will. ANZ. According to ANZ research, the 6.1% inflation rate in Q2 2022 was the highest since the early 1990s, apart from the introduction of the GST in 2000. ANZ senior economist, Catherine Birch, said that inflation is forecast to peak at 7.4% by the end of 2022, and isn't likely to get back into the RBA's 2 to 3% target bank until the second half of 2024. Inflation in Australia is too high at the moment, far outpacing wage growth. Real wages have fallen 3.3% over the past year and the purchasing power of households is falling. The RBA wants inflation to get lower, but not too low when we consider for several years leading up to the pandemic inflation was undershooting the RBA's target of 2 to 3%. This reflected a period of weak wage growth, stagnant living standards and soft consumer demand which undermined demand for businesses' goods and services. Commonwealth Bank. Following the release of the 6.1% inflation figure in July 2022, CBA economists revised their previous forecast of inflation peaking at 6.25% in 2022 to headline inflation peaking at 6.75%, before decelerating over 2023. A more recent Commonwealth Bank report commented that wage growth is fairly modest at 2.6% annually, which is short of the 3.5% that the RBA is targeting to be consistent with inflation. The RBA want wages growth up and inflation down, an unusual place for a central bank to find itself. NAB. In an interview in late July 2022, NAB CEO, Ross McEwen, predicted that the peak of the inflation cycle will probably get closer to 7 than the 6. He added that as well as raising rates, Curbing inflation growth may require finding solutions to supply factors such as the war in Ukraine and COVID-related disruptions. Data shows that 80% of people watching my videos are not subscribed. Remember, subscribing is free. It only takes a couple of seconds and you can unsubscribe at any time. Please help me and my channel by subscribing. Now back to the video. It's as much a supply issue as it is demand. We're trying to slow down the supply, but if we get the actual manufacturing back up and running again, we get a lot more efficiencies into the system. I think these things will work their way through the system and we end up with lower inflation. One of the levers is moving interest rates to slow things down, and that's what's certainly trying to be enacted at the moment. It will have an impact, but I don't think it's doing that yet. Westpac economists are also forecasting that headline inflation will likely peak at over 7% by the year's end, which is higher than their previously predicted peak of 6.6% from June this year. They are also predicting that rather than pausing the pace of rate hikes, the RBA will make 25-point hikes to the cash rate each month until February next year, where it will reach 3.35%. The language around the priority of inflation, labor markets, and wages does not seem consistent with an imminent pause and the risks around inflationary expectations that could materialize through a premature pause. AMP economists have forecast that headline consumer price inflation will peak in Australia at around 7.5% by December 2022, before contracting to 5.5% by mid-2023 and to 3.5% by late 2023. Looking around the world, the U.S. economy may have already hit its inflation peak, while Europe may not see its peak until 2023.